market outlook for the fourth quarter of 2015. I'm Todd Clark. Coming up, a review of the worst quarter for the stock market in 4 years. We'll look at market performance and see how CLS portfolios fared. We'll also check in on our investment themes and take a closer look at 2 of those themes, high quality and technology. Now for more on a rough quarter, let's turn to our Chief Investment Officer, Rusty Vanneman.
Thanks, Todd. You're right, it was a rough quarter. But before we dive into the numbers, let's review CLS's investment philosophy. First and foremost, our primary goal at CLS is investor success, and we achieve that through 1, portfolio management, and 2, through education and communication. Regarding the latter, our education, communication, and client service resources are better than ever before. On the former, we continue to believe that global, balanced, risk-budgeted ETF portfolios are the keys to successful portfolio management. Let's break this comment down a bit more. First, we are global investors. We stand by our global tag now more than ever. Second, we are asset allocators. We manage risk and return requirements through balanced portfolios. Our asset allocation and risk management research continues to prove each and every year. Third, and perhaps most important, is risk budgeting. Risk budgeting is what CLS is known for, and we're doing it well. Our portfolios are on top of their risk targets, and we remain flexible in our allocation decisions. Over 90% of our assets are risk budgeted. Fourth, we are one of the largest active money managers of exchange-traded funds, otherwise known as ETFs, and our ability to analyze ETFs is the best it's ever been. We believe that ETFs are superior investment vehicles for a variety of reasons, including low cost and dependable market exposures. Okay, now let's get to the numbers. For starters, domestic stocks were down more than 7% last quarter. That put performance for the year at over negative 5%, and 1-year performance is down about a half a point now. We saw far better performance from larger companies than small cap stocks. Large caps outperformed by a wide margin. On the international front, both developed and emerging markets were down significantly. Developed fell more than 10%, and emerging fell nearly 18%. So far this year, developed international shows similar returns to the U.S. markets, but emerging markets are down more. The bond market gained more than just 1% in the third quarter. The 1-year number is positive, just less than 3%. 30-day T-bills, meanwhile, have provided a 0 return in all time frames going back 5 years. So, what worked for CLS in the third quarter, at least on a relative basis, and what didn't? The positives include exposure to some international markets, like in Europe, and key domestic sectors like technology. In fixed income, exposure to floating rate bonds and investment grade debt helped. On the negative side, exposure to energy companies and commodities weighed on portfolios. While some investments performed well for CLS and some did not, we remain strong believers in globally diversified portfolios that are risk budgeted and balanced.
Thanks, Rusty. We're firmly committed to that investment philosophy. We believe it serves our advisors and your investors best in the long term. Now let's turn to the coming quarter. With a look ahead on stocks, here's Senior Market Strategist Joe Smith.
Thanks, Todd. First, here are some key factors affecting our market outlook. Reported earnings growth is negative and getting worse. It's expected to decrease again in the third quarter, but year-end earnings should turn positive. Higher quality and large cap stocks tend to do better in this environment. We haven't seen it yet this year, but we think large caps will reassert their leadership. There are upsides here. When earnings estimates are low, the stage is set for positive surprises. That tends to be a catalyst for gains, and the stock market often has its best 12-month returns when earnings improve from low levels. The earnings yield was just over 5% at the end of September. The dividend yield, meanwhile, was just over 2%. Both valuations are below their 41-year averages, suggesting the market is not cheap. As we enter the fourth quarter, investor sentiment has become negative. Usually, when it gets this low, forward returns are above average. Why? When everybody feels the same way, where will the fresh selling powder come from to push the market lower? And usually, when expectations are very bullish or bearish, the good and bad news is already baked into the price. Seasonality also plays a big role in the U.S. and global stock markets this time of year. The fourth quarter historically produces positive returns. In fact, globally, December is positive 80% of the time. So how does it look going forward? Dividends are expected to decline and earnings growth will be sluggish. At CLS, we expect little change in valuations and our expected U.S. stock market return is 6%. This all leads to the question, what will valuations do? Given the strong expansion and valuation multiples, it's not likely we'll see stronger gains. In other words, the recent increase in the U.S. investments is happening more rapidly than earnings growth supports. We do, however, expect higher returns from international. Currently, expected returns, especially for emerging market ETFs, are significantly higher than they are domestically.
Thanks, Joe. As with stocks, it's important to remember that our outlook for the bond market has a positive skew over the long term. And as always, given an uncertain future, we should build balanced, diversified portfolios. Now for a closer look at one of CLS's investment themes that we believe shows a lot of promise in this uncertain environment, high quality. With more, here's Associate Portfolio Manager, Kostya Edis.
Thank you, Todd. CLS maintains its 4 key investment themes for the year. These form the basis for the way our team builds and maintains portfolios. Our emphasis on high quality is a carryover theme from last year. In defining high quality, we like companies with relatively stable profitability, strong balance sheets, and higher dividend growth. These companies should do better in slower growth environments, which we expect in the years ahead. Their stocks should also hold up better in volatile markets. In the past, we have discussed the benefits of high-quality domestic equities in the face of slow growth and volatility. But there are other forms of quality as well. Quality is not simply a domestic phenomenon. It has shown similar results abroad. Quality has superior performance, represented here by dividend growers, over time. In fact, quality has not only outperformed, it has experienced lower volatility. Quality is also not just an equity phenomenon. It has shown similar defensive characteristics within fixed income. So those are just a couple reasons why we believe strongly in high quality, especially in our current environment.
Thanks, Kostya. Another strong investment theme at CLS is emerging markets. There are attractive valuation numbers in emerging equity markets, particularly in Asia, which suggests future returns will be higher overseas than domestically. Advisors with access to a login can find out more on our emerging markets theme in our monthly chart pack, which we publish on CLS's PM Insight portal. Now, with a closer look at another theme we like here at CLS, here's Senior Portfolio Manager JJ Schinkelberg with our take on technology.
The technology sector offers one of the most attractive opportunities within domestic equities. Despite its robust performance last year and early this year, the relative valuation of technology remains among the cheapest. At CLS, we use internal chart packs to analyze the relative valuations and technical backdrop of asset classes. We chart the performance of numerous ETFs relative to benchmarks. And by showing relative returns, we can determine whether the asset is outperforming or underperforming. We show returns over a 3-year period, which is typical of reversals. But we also include a 1/4 and 1-year moving average to evaluate the strength of the trend. Simplistically, when the short-term moving average is above the long term, the asset is positively trending. So how does this apply to technology? The technology sector has shown strong relative valuations and positive momentum over the past year. It also has outside levels of innovation and cash on hand. All that combined means we continue to love technology.
Thanks, JJ. We do love technology at CLS, although I still need my kids to work my smartphone. Before we wrap up, let's take it to Rusty for a final word.
Thanks, Todd. Before we go, I do want to mention our final investment theme for the year, which is tactical fixed income. Because we believe bond returns will be below average in the years ahead, we will actively manage our fixed income holdings. The fixed income markets have far more volatility than many investors expect, which means more opportunities for active management. Now, here's our takeaway as we look ahead to the end of the year. We will likely see below average returns from U.S. equities, but better, perhaps far better returns from international equities. And as for the bond market, we recognize it's important to be flexible. Return expectations should be tempered, but bonds still have a role. Investors just need to be tactical with bond positioning. So, stay global, stay diversified, and as always, stay balanced.
Thanks, Rusty. Well, it's been a rough quarter, but we believe our investment philosophy and the tireless work of our portfolio management team has steered us well, and we look forward to a more stable fourth quarter. With that, we say goodbye to the third quarter of 2015. As always, you can find the full written quarterly market outlook at clsinvest.com. We'll be back in the new year with our first quarter outlook of 2016. I'm Todd Clark. Thank you for your time and trust in CLS Investments.